Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
Welcome back to Modern Investing Techniques, episode 83. Today is June 21st, 2026. I'm Patrick, broadcasting from Vancouver. Let's get into the numbers, the strategy, and today's AI-selected trade. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. The week's biggest developments pulled together, what actually moved, why it matters, and what to watch next. The Iran interim Hormuz agreement drove the clearest relief across markets all week. S&P 500 closed at 7,431, up 0.5%. NASDAQ closed at 25,889, up 0.3%. TSX Composite closed at 34,938, up 0.8%. Oil dropped more than $4 below 80 as tanker traffic resumed through the strait. The Bank of Canada next decision sits on December 9, with markets pricing limited near-term cuts. The nearest Fed decision window is also December, keeping duration exposure in focus for fixed income sleeves. Index levels were unavailable from the live feed on a couple of days, but the pattern held with broad gains on geopolitical relief and rotation into financials and consumer discretionary. Market index data is currently unavailable from the feed for a complete portfolio versus NASDAQ comparison this week, so I will not invent numbers. The single most consequential thread was the return of risk appetite after the Hormuz deal and how that reshaped both oil and equity spreads. That relief set the stage for the $22 billion Fox Roku transaction to stand out as a clean M&A arbitrage opportunity. Roku shares traded at a discount to the cash and stock offer, creating a defined outcome position that profits if the deal closes on schedule. The strategy calls for sizing the position to 2 to 3% of the portfolio and pairing it with an index short or put spread to neutralize broad market moves. Historical returns in low volatility periods have run between 5 and 12% annualized when regulatory risk stays minimal. Canadian investors can replicate the same approach inside a TFS-A once the deal terms appear in the brokerage corporate actions feed. This is the exact scenario where our earlier rule about volume confirmation would have helped because acquisition catalysts need that confirmation to withstand sector rotations. The same risk-on environment also favored income strategies over pure directional bets as futures stayed subdued. A covered call ETF approach lets investors sell 30 delta monthly calls on QQQ or XIU to collect 8 to 12% annualized yield on top of any capital appreciation. Implementation starts on platforms like Questrade or Interactive Brokers by selecting the broad equity ETF and selling the calls at the 30 delta strike each month. The premium arrives regardless of modest upside, but the main risk is opportunity cost if the underlying rallies sharply above the strike. Size the covered calls so they represent no more than 20 to 30% of total equity exposure to preserve upside participation. This approach has historically performed best in range-bound or mildly bullish markets, where the underlying drifts sideways. Tokenization of NYSE and NASDAQ shares also gained traction as a way to access 24/7 settlement once regulators clear the structures. The approach can reduce overnight gaps during volatile periods, but carries custody and regulatory risks until clearer North American rules emerge. Start by paper trading the concept on any available fractional share platform to understand settlement mechanics before committing capital. Core satellite construction gained fresh attention as a way to anchor 70 to 80% in XEQT or VTI/VXUS while allocating 20 to 30% to targeted sleeves. The satellite portion can capture discrete catalysts such as quantum funding or European cyclicals that broad indexes will not fully price. Rebalance the satellite sleeve quarterly or when any position doubles in weight and sell once the catalyst has been fully priced in. The main risk is overconcentration in the satellite if multiple catalysts arrive at once. Regulatory approval for Kraken Robotics to complete its Cavalia Group purchase removed a key overhang for that small cap name. Investors can screen TSXV names that have announced deals and wait for the final nod using volume above the 20-day average as confirmation. Stingray Group announced a $15.4 million repurchase of 1 million shares at $15.40, a 5.1% discount to the prior close. Screen for similar opportunities by monitoring TSX filings for private agreements and comparing the repurchase price to the 20-day volume-weighted average. This tactic has historically worked best in low volatility periods when management has high conviction in free cash flow stability. Canada's Nuvei announced a $2.75 billion acquisition of Payoneer to expand its cross-border payments reach. The transaction targets Payoneer's existing merchant base and adds scale in emerging markets where Nuvei has limited presence. Deal documents filed with regulators show the purchase will be funded through a mix of cash and new equity issuance. Payoneer shares traded at a modest premium to the offer price immediately after announcement, reflecting market expectations for quick regulatory clearance. Investors tracking similar cross-border fintech deals can monitor SEDAR Plus for the formal arrangement agreement expected within 30 days. The move positions Nuvei to compete more directly with established players in the global payments infrastructure space. NVIDIA launched its first high-grade bond offering since 2021, raising several $billion at favorable spreads. The proceeds are earmarked for general corporate purposes, including potential share repurchases and additional data center capacity. Bond pricing came in tighter than initial guidance, reflecting strong institutional demand for the semiconductor giant's credit profile. This marks a return to the debt markets after a period of elevated cash generation from AI-related chip sales. Canadian fixed income investors monitoring similar investment-grade issuance can compare the NVIDIA spread to domestic utility and pipeline names for relative value. The timing coincides with broader market relief that has lowered overall credit volatility. Accenture struck a $418 billion cybersecurity deal, but shares fell after the company trimmed its full-year forecast. The acquisition expands Accenture's managed detection and response capabilities across enterprise clients already using its cloud migration services. Management cited integration costs and a slower than expected ramp in new contract wins as reasons for the revised outlook. The stock reaction highlights how even large strategic purchases can pressure multiples when accompanied by any earnings caution. Investors following professional services names can watch for similar forecast adjustments in upcoming quarterly updates from peers. The deal itself remains accretive on a multi-year basis according to the company's internal projections. MDA Space agreed to acquire US-based Blue Canyon Technologies, adding satellite component manufacturing capacity. The purchase brings Blue Canyon's existing NASA and defense contracts into MDA's orbit and creates cross-selling opportunities for Canadian geospatial data services. Terms include an upfront cash component plus earn-out provisions tied to future revenue milestones. Blue Canyon shareholders approved the transaction earlier this month, clearing one regulatory hurdle. Canadian investors can access the combined entity through MDA's TSX listing once the deal closes later this summer. The move strengthens MDA's position in the growing small satellite supply chain. Empire reported fourth quarter profit and revenue above year-ago levels and raised its quarterly dividend. Same-store sales growth in the grocery segment exceeded analyst models, while the pharmacy division contributed incremental margin expansion. The dividend increase signals management confidence in sustained free cash flow after several years of network optimization. Empire shares reacted positively in the session following the release, reflecting the market's preference for defensive consumer staples exposure. Investors screening Canadian retailers can compare Empire's same-store metrics to Loblaw and Metro filings on CDAR Plus for relative performance. The results also underscore how food inflation has stabilized enough to support volume recovery. The UAE announced further steps to reduce its dependency on Strait of Hormuz crude transit to zero within the next 5 years. New pipeline and storage infrastructure projects will reroute a portion of export volumes through alternative terminals. The plan directly addresses the supply route uncertainty that lingered even after the interim Hormuz agreement. Oil traders noted the announcement contributed to the further easing in Brent and WTI benchmarks during the week. Canadian energy investors holding pipeline or midstream names can monitor similar sovereign diversification announcements for volume implications. The development illustrates how geopolitical de-risk events can extend beyond immediate price moves into longer-term infrastructure shifts. The deadline for formally extending CUSMA is approaching, and negotiators are still addressing automotive rules of origin and dairy access issues. Canadian officials have signaled willingness to accept modest adjustments rather than risk a lapse that would revert to WTO tariffs. Markets are watching the talks for any signals that could affect cross-border supply chains in autos and agriculture. A failure to extend would introduce new cost layers for companies with integrated North American operations. Investors with exposure to Canadian exporters can review company filings for contingency language around tariff scenarios. The outcome will also influence Bank of Canada growth forecasts released later this summer. Canada scaled back its luxury tax on planes and cars after the levy collected more than $900 million in its first full year. The adjustment lowers the tax rate on certain higher-priced vehicles and exempts specific business aircraft configurations. Finance officials cited administrative complexity and competitive concerns with U.S. border states as reasons for the change. The move reduces a revenue headwind for domestic luxury retailers and importers. Investors following consumer discretionary names can assess whether the tax relief translates into improved sales momentum in upcoming quarters. The policy shift also removes one source of uncertainty for high net worth spending patterns. Earnings from Alimentation Couche-Tard and BlackBerry sit on the week ahead watch list. Bitcoin rebounded above 63,000 on regulatory developments that now dominate crypto allocations. European equities are positioned to lead the second half as peace prospects ease stagflation risks. The ongoing story of the Iran deal shows how quickly oil can drop once supply routes normalize and how that flows into energy-sensitive cyclicals. Since we last covered the HIMS position, the lesson remains that acquisition catalysts need volume confirmation to withstand sector rotations. The NVO trade closed down 3.61% and reminded us that even strong fundamental news can be overridden by broader rotation. Market index data is currently unavailable from the feed, so I cannot report a complete portfolio versus NASDAQ alpha figure for the week. Our AI analysis is learning from the pattern of needing volume confirmation on catalysts and adjusting position sizing accordingly. The biggest open question heading into next week is how quickly the Fed under new chair Kevin Warsh shifts rate expectations. Watch for earnings from Alimentation Couche-Tard and BlackBerry as the next concrete catalysts. One practical takeaway is to keep a small satellite sleeve ready for regulatory approvals that de-risk small cap names like the Kraken Robotics situation. Before we wrap, keep an eye on any fresh TSXV filings that could surface similar buyback or deal opportunities early next week. That's modern investing techniques for today. If you found this useful, share it with a fellow investor and subscribe wherever you listen. Check the resources page for tools and platforms we discussed. We're back tomorrow. Keep learning, keep investing, and if you'd rather watch than listen, find us on YouTube at NARA Network. Links in the show notes. And before you go, this show is part of the NARA Network, a family of daily podcasts covering tech, science, markets, and more. If you enjoyed today's episode, give Environmental Intelligence a listen, the Environment and Climate Policy Brief for Canada. You can explore the whole lineup at neurrannetwork.com. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you didn't laugh?